we created this presentation, ownership versus renting, because Carmelo and I, we want to just break it down for people. And like Carmelo said, just let the numbers speak for itself, because there is some perception out there. I mean, when people just look at the numbers, frankly, like if you look at it short term, and okay, you can rent a 1-bedroom condo for, I don't know, $2,500. And if you were to buy a condo, it's you're looking at least $500,000 in the Greater Toronto area. It seems like a lot, but we want to just show you what does it actually look like over the course of 5 years. Where is your money going? And that's what this presentation's called. It's ownership versus renting, the long-term benefits of ownership. So maybe just a little bit about ourselves first. Carmelo, take it away.
Thank you, everyone, for joining us. My name is Carmelo Boutis. I'm a mortgage agent. I do mortgages and only mortgages. I work for a company called yourmortgageyourway.ca. I've been in the mortgage industry for over 20 years. I started my career as a mortgage underwriter. And for those who don't know what a mortgage underwriter, what that position is, it's the person at the bank that actually reviews your application and makes a decision whether they're going to approve you for the financing or not. So the first thing I learned in my career was how the banks think when they look at an application. I've been, again, doing this for like over 20 years. I've worked for the big banks, the smaller alternative lenders. Now I'm independent. I have access to multiple banks. I have no loyalty to any of them. Really, who has the best rate this week and the best product to serve you for your mortgage needs, right? So I work for you. I don't work for any bank.
Sure.
That's a little bit about myself.
So as a mortgage underwriter, were you like Mr. Popular or what? Because I mean,
those who were approved loved me. Those who got declined, yeah, they were following me on social media back in 20 years ago. Yeah,
you weren't getting hate mail.
I was not getting. Yeah, I was getting. Yeah, it is. But that's the first thing I learned, which was the best thing. It happened to be the best move in my career. Just to start there.
No, I mean, it sounds like an excellent segue. And I mean, also, by the way, if anybody wants to connect with Carmelo on Instagram, it's at Carmelo Mortgage. I learn a lot from Carmelo every single day and through his posts and through doing these webinars. So I hope that, those who attend can get some knowledge as well.
Thanks, Alex. Now tell us a little bit about yourself.
All right. So my name is Alex Żwanieski. I'm a realtor of Remax Condos Plus in downtown Toronto. Spent over a decade in Toronto's condominium industry before getting into real estate. I was the vice president of a service provider company. We basically provided services only to condos. I've probably been in like every single condo in the GTA, whether it was to do a risk assessment, meet with a property manager, quote on services, meet with board members, tour the building. I've conducted over 65 condominium assessments. I've been a real estate investor since 2013, both in Ontario and in Alberta as well. And for those that have joined my webinars about investing in Alberta, know about that as well, and some of the things I've been doing in Calgary. And yeah, last year in 2022, I was in the top 1% for GTA condo sales from over 70,000 Toronto Regional Real Estate Board realtors. And if anybody wants to connect on Instagram, it's at alexsaid.realtor. A lot of content around investing, around purchasing condos, just condo knowledge. And yeah, I just try to kind of relay that information. Anytime a client asks me something, I turn that into a post.
Alex, I love your social media. You're a lot more active than I am. I envy you, and I'm going to try to catch up with the amount that you do. Maybe not as daily, but put out more information out there, just like you do.
Take out your phone and start talking, man. That's what it's all about. So anyways, enough about us and how great we are. This presentation is about the benefits of home ownership and the long-term costs of renting. So here's some of the benefits of owning your home. When you own a home and when you're paying down a mortgage, or you have a tenant who's paying down your mortgage, that payment goes towards the principal. So essentially, you're paying down how much you own on that property at the same time that a property is appreciating, it's gaining market value. Trends in the Greater Toronto area, pretty much trends across the board in Canadian real estate. Real estate goes up. It's a hard, physical, in-demand asset. It's tangible. It's a basic human need. People need food, water, and shelter. There's a major shortage right now. There's a crazy population boom. I mean, we've already received about 1.5 million new immigrants over the last 2 years. And apparently there's also like another million that are not reported. And on top of that, we're also expecting to receive about another million over the next year and a half. We simply cannot keep up with building. This has put a major strain on rentals, and it's also put a major strain on the cost of homes, because you have people competing. Like if we build last year, if we had 1 million new immigrants come to Canada and we built about 300,000 new homes, well, if you need one home for every 2 people, we're about 200,000 homes short. And we're just going to continue to be more short because there's a lot of red tape for builders.
Yeah, there's a real big disconnect. It was Benjamin Tao the other week when the Trudeau and some of the people in the ministers had a meeting in the East Coast. Benjamin Tao, he's a leading economist at CIBC. He uncovered that the Canada census, they're underreporting about 1 million. It's estimated about 1 million new people that are currently here under a visa working, but not part of the Canadian population, which I found is just, how does that get missed by the government, that there's 1 million people here? So there's clearly a shortage in immigration. We have a lot of people migrating here. We're at record numbers.
International students as well, right? Like
Yeah.
there is just, it's crazy. I mean, this time last year in Toronto, I mean, the summer is always hot for rentals, but last summer, a 1-bedroom condo with parking was about $2,200. This summer, $2,500. That's a crazy increase. But I mean, we're going to get there. That's part of the presentation. Here's the real estate trends. Okay, so here's the price trends for, the maroon line is detached, yellow is freehold. Then you have condo townhouses, and then just condo apartments. So you can see, I mean, there are bumps in the road. Events do happen. Things like, the financial crisis, in the US, things like COVID, they impact real estate prices. Interest rates going up, that impacts real estate prices. But when you look, real estate is a buy and hold type of strategy. The goal is that you purchase a property and you let it appreciate. And you can see that pretty much, at any point on this chart, even if you bought at the top here of 2018, well, if you just went a couple of years later to 2020 or 2021 or today, you're up. And the same thing is, like, even if you bought a property at the peak of COVID, which would have been, spring of 2022, if you look back at that property today, you may seem like you overpaid, but if you go 3-4 years into the future, it's going to look like a bargain.
Yes, that's what always happens. Again, when it comes to real estate, there's a saying, Alex, and correct me if I'm right or if I'm wrong. It's time in the market, not timing the market.
It's not timing the market. Those people that try to time the market or, fish the bottom of the market, that's just a fool's errand. Like, you're not going to know that you've hit the bottom of the market until already the price trend has reversed and started to go up. Ultimately, it's about, being comfortable with that purchasing a property that you are happy with, that you can afford. It's a lot more about that than, trying to, find where the bottom of the market is, or just like, sitting on the sidelines, analyzing, waiting, taking action. I mean, educated, calculated action, attending things like our webinars, educating yourself, knowing what you're getting into, working with trusted partners, doing your due diligence. But at the same time, it's about taking that step and not just kind of sitting with analysis paralysis.
Exactly. And one thing I love about this chart, Alex, it speaks for itself. Real estate long-term price only goes up.
It's a long-term game, man. It's a long-term game. So we're going to do a little scenario for you guys. And this is a real scenario. So this summer, Carmelo and we assisted our client in purchasing a 1-bedroom condo in Etobicoke. She purchased it for 500 with parking. She purchased it for 540,000. And what we're going to do here is we're going to do a comparison between the long-term costs and benefits of this purchase as opposed to had this client continued to rent and been in the rental market. So for the purpose of this presentation, what we're going to be doing is we're going to be comparing, the cost of a 1-bedroom condo with parking, which is about 540,000, to the cost of renting that similar unit today. I mean, today it's a little bit more. It's about 2,450 or maybe 2,500, but let's say 2,400. So let's say, you're renting a 1-bedroom condo with parking for 2,400. You pay $2,400 a month, and all of that goes to the landlord. What happens with the ownership?
Well, when you buy it, again, you buy that condo for as little as $29,000 for down payment. You would need money to cover closing costs. But when you look at your payments, I'm using today's interest rates, not interest rates from the summer. Today, the mortgage payments will come out to $3,257 per month. The maintenance fees for that condo is exactly $446. Property taxes, $126 per month. So when you own it, your payments are going to be higher. It's going to be $3,829. So versus renting, yes, your payments are going to be higher. And that is a big difference. But the one thing you have to keep in mind, that first payment you make on your mortgage, $830 goes towards principal, which means paying back that mortgage. And how mortgages work, for every payment you make, the next payment, a little more goes towards principal. A little more is you're paying yourself. Yep. So that's what happens after when you initially get this property. Yep. So what happens after 1 year, Alex?
So yeah, we're going to fast forward 1 year. This condo was built before 2018, so this is a rent-controlled property. So the landlord comes around and, Carmelo, they're going to be increasing rent by 2.5%, which is what they're permitted to do in 2023. Your rent goes up $60. Okay, $2,460. It's not a huge difference. What's going on the ownership side?
So Alex, again, with your chart, I calculated the average price of real estate going up, compounding is, I think, like 8.4% per year. So for our example today, we're just going to take that original price, 540,000. It's going to go up 5% from that original price, which is 27,000 per year. No compounding. We want to keep it simple. We want to try and be conservative, lower than the averages. So that condo, is now gone up in value by $27,000. So the value, not 540, it's 567 a year from now. Over the course of the year, you've paid down $10,221. Now, the amount of equity you have in the property, and equity is just really the value of the property, subtracting the balance you still owe to the bank, that $45,782 worth of equity.
Right. So basically, it's your $540,000 that you bought the property for, minus the $29,000 that you use as your down payment. Then you also factor in the new appreciated value of that condo and the amount of mortgage you've paid down.
No, I don't. The down payment, closing costs, not really. I don't really. It's just equity is the value subtract the mortgage.
Okay,
that's it.
So the value subtract the mortgage. So the new value of that condo after a year is $567,000. You paid down $10,000. The value went up from the original purchase. Yep. You're up $45,000 after a year.
Your mortgage came down a little bit. Yeah, yep. 45,000 equity. So usually, Alex, people stay in their rent, their condo, their condo, they're renting for a year. What happens on year two? What's the common thing that happens?
Well, year two comes along and the landlord cannot afford to pay for that condo anymore, or their mother is moving in. So landlord is selling. Time to find a new rental. In 2002, rental prices increased 10%. So we're going to project that, and again, conservatively, that renting that same condo 2 years from now is not going to be $2,400. It's going to be $2,700. So your rent went up $300 a month after 2 years. You're back in the rental market. And not to mention, you're also competing with all the newcomers that came to Canada. So you may have to also shell out a few additional months of rent up front, but we're not going to get into that.
We're not going to get into that. We're going to keep it simple. So now when you own it, again, the value's gone up another $27,000. Over 2 years, you've paid down that mortgage by $21,017. So in 2 years, the equity you have in this property, which is part of what your net worth, it's an asset you own, of $83,577. It's kind of like in a very big piggy bank, let's call it.
Yeah, and that's what homeownership is. It's like a forced savings account. But let's go fast forward again. 5 years. Okay, so 3 years after the 2 years. Again, your landlord is selling. You have to find another rental property. Welcome, Ryan. So 5 years went by. You have to find another rental property. The market rent is now $3,000 a month. So what happened over 5 years? Over 5 years of renting, all you've done is you've paid $155,000 into somebody else's pocket, and now you're back in the market competing with everybody else, all the newcomers, trying to find a new rental, and now it's going to cost you $600 more a month.
Now, when you own it again, we're saying that same price you bought it at $540,000. It's gone up 5% from that original amount. Nothing compounding, which doesn't quite work that way. The value of your condo is now $675,000. Over the course of 5 years, you pay down your mortgage by over $57,000. You have over $200,000 in equity. A lot of
equity.
It's a very big piggy bank, as I said, right? So now, instead of when you paid someone else's mortgage, you paid $155,000 to someone else, you are a lot more wealthier. You have $200,000 where you could do whatever you like with it.
Yep, you can use that towards purchasing another property,
or you can just you can stay in the same property, keep on paying your mortgage down. If you want to upsize, right? So let's kind of break it down, how it all works.
Go ahead, Carmelo.
So again, when you bought the home, you bought it for $540,000. The new value of the condo is $675,000.
Yep.
Over the 5 years, you've paid down $57,000, a little more than $57,000 on your mortgage. Your balance at the end of the 5 years is $474,260. So the equity you got, the equity is the value, subtract your mortgage, gives you $200,000. Let's call it $201,000 in equity.
Okay.
Now, it costs you money to buy this place. It costs you $29,000 for a down payment. It costs you $8,000 in closing costs. It costs you $37,000. So if you really subtract that $37,000 from, let's call it your equity, you got a profit of over $163,000. That's your
over
profit.
5 years. That's like having a second full-time job that pays you $32,000 a year. Like, where else are you going to get that?
Yeah. Where else are you going to find having to pay a place to live, having to pay today's food prices, having to pay today's gas prices, life expenses, the cost of everything's going up. How do you save $32,000 after tax? Because the equity you have in your home as your primary residence, it is tax-free. It is sheltered if you do decide to sell it. You don't pay taxes on it. So how do you have, Alex, there's no way I could save $32,000 after my expenses. There's just no way.
No, I need to have a second, you need to have like a second full-time job for that. And I mean, like, here's the bottom line here. Like, what kept on happening in this scenario? And I see this time and time again with people I work with. Landlords are selling their properties. Their mother-in-law is moving in. Sometimes they may say that their mother is moving in, but nobody's actually moving in. They just want to jack up the rent to market rent. Whatever it is, ultimately, when you're continuing to rent, you're living around somebody else's calendar, somebody else's investment plan. So it's not just about, not paying $155,000 into somebody else's pocket, which is quite significant, and creating over $200,000 worth of equity for yourself. It's also about creating that security for you and being actually like in control of where you live. Have
And Alex, if you go back that slide again, at the beginning, it may seem like, oh my God, if I own, I have $1,400 less to spend for myself. But it's owning is you have to sacrifice something, right? You may not go on 2 vacations a year. You may go on 1, right? You may not go out for dinner with friends every single weekend. You may go out every other weekend. But the value of owning, if you could change your habits and your spending and put that extra money towards yourself for owning, the gain is astronomical.
I mean, ultimately, I would get a lot more satisfaction personally after 5 years that I own my own property, as opposed to like, oh, every Friday I went out for, dinner, or every Saturday went out to the club and got bottle service. Like, what's more significant, right? Like, what's actually more real and more impactful. And like you said, yeah, there are sacrifices that have to be made, but like we talk about in our webinar about, financial planning, like when you actually break down what it is that you're spending money on, and you see like, what does, buying lunch every single day at work equate to, like, as a cost, and not to factor in also the fact that, when you go and buy something at a fast food restaurant, they're using probably the cheapest, lowest quality ingredients that you're paying a premium to put into your body. With the way that, our population's going and the outlook that our government has on increasing Canada's population, the cost of home ownership is going to just only be going higher and higher, because, a lot of these people are already high skilled. They have high paying jobs. They're coming into a market where they can actually, own a property. Sometimes they're selling their property back home to get into our real estate market. Home ownership is part of that Canadian American dream. So, it's like you said, it's about making sacrifices, Carmelo.
Yeah, it is a sacrifice, but once you get into it, you're going to find, one, your lifestyle is going to change anyways.
Yeah.
And two, again, you're going to, it creates a lot of freedom down the road. It's very hard at the beginning, like to pay an extra $1,400 out of pocket. It is a big cut to your initial lifestyle.
Yep.
But you're going to get used to it.
100%. Yeah. So, I think that is that the end of this.
Now it's time for anybody who has questions. This is a very short presentation. I love it because the numbers speak louder than words. If you rent, you're paying someone else's mortgage. You're paying $155,000 in someone else's bank account. Yeah. And you own after 5 years, even at today's interest rates. Yeah. You have $200,000 in your pocket.